Hello everyone, welcome to ACCA P6 UK lectures. We are still at income tax. Now we will move to some more aspects. As you know, in the previous video we looked at interest income and the dividend income, and now there are a couple of more things left as well. If you come to page number 2 of your lecture notes, it says interest income. We've already seen interest income in the previous video anyway. We know that interest income is received gross. There is only one exception where it's received from the unquoted company, although there are a couple of more as well. But as far as the P6 exam is concerned, most common is when you have received the interest from unquoted company. Alright, just after that on page 2 it says note 2, deductible interest. Alright, so these note 1, note 2, note 3, these are the notes. On page 1, if you see on the income tax pro forma, it says interest income note 1. And just beneath that it says savings income, not savings, deductible interest, note 2. And after that personal allowance, note 3. So these are the notes which we are going to look at. Now, less deductible interest. So what is deductible interest? Basically, that whenever you go to a bank and you say that I want to take some loan, and then bank will say, all right, okay, what do you need the loan for? Then I will say I want to invest in the business, I want to get married, I want to give it to hospital because I'm getting some treatment. So there will certainly be some reason why I'm taking the loan. So if you take the loan and you invest that loan in one of these reasons, what reasons? The reasons are given to you on the notes. Note 2, deductible interest. So basically, if you have taken the loan and you have invested in partnership, if you've taken a loan and invested in plant and machinery, or invested in employee control company, or invested in cooperative in the UK, then interest paid on that loan will be deducted while making the income tax pro forma. Alright, so you went to the bank and you said I want to buy a plant and machinery, then alright, they will say, hey, the loan, then whatever interest you are paying on that loan, that interest will be deductible interest. Alright, so that's what it says in the notes as well, note 2. After that it says note 3, personal allowance. Just leave the personal allowance for now. Let's look at note 4, exempt income. Now if you have received income from any of these sources, then that income is not subject to tax. So what are these sources? Income if you have received from savings certificates which are issued by National Savings and Investment Bank. If you have won any prizes on premium bonds, then them are not subject to the tax as well. If you have any gambling winnings which is not listed here, that is not subject to income tax as well. Child benefit, it says here, it is benefit paid to people when you are looking after your child. Alright, so it is paid to people who are looking after their child if they have at least one children. Alright. After that, it says individual savings account, maximum £20,000 per year. So if you have any income in ISA, basically it is an account, savings account which you open with the bank or the financial institution in the UK. So if you are earning anything out of that, up to £20,000 is exempt. You don't have to pay any tax. Alright, so as far as child benefit is concerned, the last one, I've explained you, child benefit is government gives the benefit if you're looking after your child. Now government gives the benefit when you are a poor person, although the government might keep giving you the benefit even if you get rich, even if you get a handsome job. Now if you get the handsome job and HMRC came to know that you are earning good money means £50,000 per year. So if you're earning good money, say for example £50,000 or above that, then HMRC will say that I will charge you a penalty if you keep taking the child benefit, because you are earning £50,000 anyway, so you don't need any child benefit. Alright, so if you're earning more than £50,000, just tell HMRC I don't want any child benefit, or otherwise they will charge you a penalty which can go maximum up to the child benefit itself. So we will see child benefit income tax charge in the next video anyway. Alright, so I was just going to tell you that although it is exempt, but you might have to face some penalty. Alright, so you might have to pay some charge. Right, so that was it. Apart from it, we are only left with note number 3 as far as this page is concerned. So let's look at the note 3 now. So note 3 is about personal allowance. So every individual in the UK, regardless of their income, regardless of their age, they are eligible to earn up to 11,500 per year for our current tax year, which is 17-18. So up to 11,500, they do not have to pay any tax at all. Whatever you are earning in excess of 11,500, you will have to pay tax on that. Say for example, if you are earning 11,500, you don't have to pay any tax. If you're earning below that, you don't have to pay any tax. If you are earning 12,000 pounds up to 11,500, you do not have to pay any tax. But on excess of that 500 pounds, you will have to pay any tax, depending on which source of income it is. It is non-saving, savings or dividend, and then we will see that if you have to pay any tax. All right, so basically personal allowance is 11,500 for our current tax year. So our current tax year is tax year, which one is it? Tax year 17-18, isn't it? So personal allowance for our current tax year is 11,500. 11,500. Now it depends on which tax year you are talking about. I remember it was 6,000 pounds years ago, and now it is almost double. Right, so it might go up to 20,000 pounds in some time. So it will vary year by year. All right, so previous year it was 11,000 pounds. So next year it is, I think, 12,000 pounds. Anyway, so it will vary every year. So up to 11,000 pounds, you do not have to pay any tax. Whatever in excess of that it is, you will have to pay some tax. On income tax pro forma, we know that first we list down all the sources of income. If you go to page number 1 of your notes, we list down all the sources of income. Then we deduct the deductible interest, right, which we have seen a couple of minutes ago. Deductible interest. We deduct the deductible interest. After deducting the deductible interest, that is our net income before personal allowance. Right. Now, out of that net income, we deduct the personal allowance. So that is net income before personal allowance. Then we deduct the personal allowance. So that is net income before personal allowance, which I am referring to you again and again. That is net income before personal allowance. There is another thing as well called adjusted net income. All right, adjusted net income. So what is adjusted net income? Let's look at the adjusted net income now. So adjusted net income. We will be looking at adjusted net income many times in next videos as well. So you might want to know what the adjusted net income is. So adjusted net income basically means net income which we take from the income tax pro forma. So net income before personal allowance, net income before personal allowance from the income tax pro forma, less personal pension contribution. Personal pension contribution. All right, and when I say personal pension contribution, it means gross amount. So what is personal pension contribution? Pension could be made in two ways. One is occupational pension, and the one is personal pension. We will see at what the personal pension contribution is and what the the occupational pension is. But however, for now, I would want you to know that personal pension contribution is when you go personally to bank and you say that I want to make my pension. All right, so net income before personal allowance, and we deduct the personal pension contribution out of that. That balance amount is known as adjusted net income. Right, so that is our adjusted net income. All right, so that is our adjusted net income. Now, a circumstance or a position where your adjusted net income, this figure, where your adjusted net income is over £100,000, then HMRC says that you will not get this personal allowance. All right, so when your adjusted net income is over £100,000, then you will not get the standard personal allowance, the normal personal allowance. All right, so if you are earning over £100,000, you will not get the normal personal allowance. However, you will get the reduced personal allowance. All right, so what the reduced personal allowance is? Now it depends on how much you are earning, how much your adjusted net income is, then we will see that how much personal allowance you will get. If you're earning too much, then there is a chance that you might not get any personal allowance at all. All right. Now let's see how does it work. Now say for example, if let me write down a question as well. So I'll just make up a question. Mr. A has 140,000 pounds of net income before personal allowance and he contributed So I've listed down the question here, which we will do in a minute. So that is our example, which we will do in a minute after explaining to you how does it work anyway. All right. So I told you that when adjusted net income is over 100,000 pounds, then individual will not get the standard personal allowance. All right. So there is standard personal allowance, but he will get the reduced personal allowance. All right. So how does the reduced personal allowance work anyway? So that is our reduced personal allowance. So reduced personal allowance. So a reduced personal allowance is, we will take the adjusted net income, all right, and we will deduct 100,000 pounds out of it. As I said, the threshold is 100,000 pounds. So when your adjusted net income is in excess of 100,000 pounds, so we'll see whatever the excess is, we will have to divide that by 2. So whatever the answer is, I would say it y. So that is the amount by which personal allowance will be reduced. Right, so that is the amount by which the personal allowance will be reduced. And I will give you a hint as well. Where adjusted net income is 123,000 pounds. If I'm going out of the frame, just write it down. It is where adjusted net income is 123,000 pounds or more, we will not get any personal allowance. All right. So where our income is over 123,000 pounds, we will not get any personal allowance at all. Now, why would we not get any personal allowance if our adjusted net income is 123,000 pounds? Because just do by this example. All right. So how can we do it? So we will do it exactly here. So our adjusted net income is, say for example, 123,000 pounds. So that is 123,000 pounds less how much? 100,000 pounds, which makes the answer of how much? 23,000 pounds. So 23,000 pounds divided by 2 which gives us the exactly that amount, 11,500. All right, so that is the amount by which our personal allowance will be reduced. So how much is our personal allowance? Our personal allowance is 11,000 pounds. So if 11,000 minus 11,000, that is 0. So you will not get any personal allowance at all. So if you have over 123,000 pounds of adjusted net income, not net income, adjusted net income. When you have over 123,000 pounds of adjusted net income, then you will not get any personal allowance at all. Now I hope you have cleared the concept. Could you please do that example for me? Just pause the video and do that example for me, please. So adjusted net income of 140,000 pounds. Sorry, not adjusted net income, it is net income before personal allowance. So shall I do it here? So net income 140,000 pounds less personal pension contribution, and we need to take it the gross amount. So we need to take the gross amount, and gross amount of personal pension contribution in this case was 25,000 pounds, which makes the total of 115,000 pounds. So that is our adjusted net income. Adjusted net income of 115,000 pounds. All right. Now our adjusted net income is 115,000 pounds. We need to deduct the 100,000 pounds out of it. Deduct 100,000 pounds, which is our threshold. The remaining amount is 15,000 pounds, and we'll have to divide that by 2, which makes 7,500 pounds. So that is the amount by which our personal allowance will be reduced. So a normal personal allowance is 11,500, and we will deduct 7,500 out of it. So that will be our reduced personal allowance. That will be our reduced personal allowance. And how much it is? 4,000 pounds? 4,000 pounds. And he has contributed 25,000 pounds gross amount into the personal pension contribution. He will get personal allowance of 4,000 pounds. How? Because we took the net income, which is 140,000 pounds, we will reduce that by personal pension contribution, which is 25,000 pounds in this case, gross amount, and that will be our 115,000 pounds adjusted net income. All right. So that's how I've calculated the adjusted net income. After calculating the adjusted net income, we have to deduct the 100,000 pound threshold, like we did here. So deduct 100,000 pounds, which equals 15,000 pounds, and we'll have to reduce that to half. Divide that by 2, which gives us a total of 7,500 pounds. That is the amount by which our personal allowance will be reduced. So a normal personal allowance was 11,500, which will be reduced by 7,500 to make it reduced personal allowance of 4,000 pounds. So Mr. A will be eligible for 4,000 pounds of personal allowance. All right. So that's what it is given to our notes. If you come to page number, give me 1 second. If you come to page number 2 and note number 3, please. It is personal allowance, and good news is that it will be given to us in the question in the exam. So what will be given to us? This 11,500 will be given to us, and this 100,000 pounds, this will also be given to us. So rest of the stuff you need to know, because these are the rules which you need to know. All right. Anyway, please read this note 3 and before you wind up this lecture, because I won't read it out to you, because it is exactly the same thing which I've just shown you here. So just read it yourself. All right. And if you want to note down this answer, you can note down as well whatever is written on the board. So that's it for now, and I will see you in the next video, and we will continue with income tax. Thank you very much, and goodbye.